inflation rate now stands at 34.19%. That's the figure of June 2024. Well, NBS gave us as a National Bureau of Statistics amidst the ongoing economic reforms being instituted by government. According to the latest data, the figure represents a significant escalation from the previous month's rate of 33.95%, underscoring the persistent challenges facing the government's efforts to rein in the high cost of living. The surge in inflation has been particularly acute in the food sector, with NBS reporting a year-on-year food inflation of 40.87% in June. For more perspectives, I introduced her earlier. She's an investment analyst with Chapel Hill, Denham, Nabila Mohammed. Good afternoon, and thank you so much for coming on the program this afternoon. We appreciate this.
Thank you for having me, Mr. Tolu.
I think we should start this conversation with, let me ask you, what were you projecting, or what were you guys at Chapel Hill projecting for inflation for the month of June? We find ourselves at 34.19%. Some said 34.25%. Some were even higher than that. But what did you project, and what do you make of what we have?
So what we projected was way higher than, slightly higher than what was released. We projected around 34.69% year on year for the month of June 2024. And it's largely because of what we really saw happen in June 2024, like just looking at the realities on ground and how inflationary pressures still persisted throughout that month. So we projected higher, and numbers did come in slightly below our forecast of 4.69%. What was printed, yes, that's the positive surprise that we saw with the number. However, the negative surprise that we saw with the June CPI was the month-on-month disinflation that was truncated, given that the past 3 months did see some level of disinflation on a month-on-month basis.
I think that month-on-month basis, let's take it up from there. There's been a slight decline, right? And what would you say is responsible for that? Is it looking like some of the policies of the CBN are starting to pay off?
So for the month-on-month, yes, we can liken that to the CBN policies that started to pay off in the past 3 months before June. The persistent hike in interest rates and some level of stability that we had in the FX rates, especially in the first quarter of the year when we had inflows from FPIs as sort of cushioned the impact on the FX market. That season as well, for the first 5 months, really wasn't a period where we had rain that could be attributed to the flooding and other weather-related issues that could hinder or sort of pressure food production levels from the inflation part. So really what we noticed with those months that we had month-on-month disinflation, we did see the policies really working. But, you know, there are things that are really beyond the control of the monetary authorities that they can hardly cater to. So we still have those pressures persist, and that is largely where we're seeing that month-on-month inflation resurfaced at 2.31% versus 2.14% that it was in May 2024.
Now, talking about investments now, we saw that the last figures from the NBS talking about capital importation grew a bit. But of course, it's still more of the FPIs and not the FDIs. What's your take with regards to investors' confidence?
So really, we always classify FPIs as hot money. As they come, they go immediately. But what I would like to say is that for FDIs to really come and stay in this country, we need to look at the infrastructural levels that we are currently at, because that is what we engender them to want to come and set up their businesses here. We would have more multinationals coming to set up their Nigerian businesses because there is stable power supply, because there is adequate security, because there is good road network, and all those other infrastructural needs that we need to put in place for FDIs to really come and stay. So for FDIs, we largely saw them because of the fact that there was hiking interest rates, and that sort of made them to want to come into the country to invest, given the high interest rates and high yield environment. But aside that, FDIs really need more than high interest rate environment to come and set up their business, to come and stay in the country. So all those issues really have to be addressed for us to see an improvement in FDIs in the long run, based on the data that was released.
You're aware that sometime last week, Africa's richest man, Alhaji Aliko Dangote, talked about interest rates and the impact on the entire business community. Yes, and you know, for him to come out to say that, it means that something is really happening. Borrowing is not so interesting now for business people. Of course, the real sector has been talking about this, complaining about the effect of this consistent rise in interest rate and what it means for their businesses. But the CBN seems to be, maybe in one way, helpless. Say like, that's the way we need to go. We need to continue to increase rates so that we rein in on inflation. How does all of this come to you? Give us your understanding of this on this sentiment that something is the way it's happening at this time.
So really, as we know, the CBN, or should I say the monetary policy authorities, have very little tools really to rein in inflation. So the tools they have, they will make use of them. If it is to mop up excess liquidity in the system, we are seeing that clearly because currently system liquidity is at 5-year low in the negative, and we have seen that even the previous OMO auction that they held, there were no sales, and it just speaks to how much they have milked the system of liquidity. And that is what they can really do, aside hiking interest rates, of course, to cater to the demand side of inflation. But we really need to see some of the policies from the fiscal end of things to start to play out. Yes, they have started to talk around removing import duties on things that certain food items just to address food inflation going forward. But there's the exchange rate part of it as well, which the CBN would really have to look at in order to ensure that there is stability in the FX rates, and that would sort of support the policy around removing the import duties over the period of time that it has stipulated based on what the government has said. So all these issues really have to be put in place for us to see that overall, the hiking of interest rate, the mopping up of liquidity from the system, as well as supporting policies from the federal government will address inflation in the long term. But in the short term, these pressures still persist, and we still see that this could sort of impact the July figures when they are released or announced by the National Bureau of Statistics in August.
We're waiting for those figures. Now, you touched on something very important, the suspension of duty and waivers, tariff and taxes on some essential food items imported into the country. So in your thoughts, what impact do you think this would have on food prices? Because I spoke to a bread manufacturer, a bread maker sometime today, that's a baker, and he was telling me that it's a it's a value chain thing. The guy that sells the wheat and all of that, you know, to make flour and all of this. Well, anyway, what impact do you see this having on those basic food things, you know, pastries and all of that?
So really, it's just an incentive to sort of reduce the pressures that we're seeing in terms of food prices. When the import duty is off for a period of time, at least, aside the exchange rate volatility that could possibly pose a problem, yes, they would be able to import and also have some form of stable levels of private prices of these items in the market. So we do, in my thoughts, I don't think that it will, given that it's just for a period of, I think, over 150 days, if I'm not mistaken, for that period of time, it is not an immediate impact or effect that we'll see on food prices, because there are other factors, like I've earlier mentioned, that could sort of burden the local manufacturers and producers of food items generally. So when we still have those issues on ground, just removing the import duty is an incentive, yes, but it's not something that would see impact the inflation figure for, let's say, the month of July. At least let's see at least 1 to 2 months pass of this policy being implemented before we can really start to see an impact on the inflation numbers as they come out subsequently.
Let's talk about food inflation again and stay with it. 40.87%. Are there any quick wins for government? Many say there should be a collaborative effort between the federal government and the state government to address this trend. Security is also very important here.
Definitely, collaborative efforts will go a long way, but we need to really understand the pain points around the food production and the issues that we are having. We have the insecurity that is something that cannot be that will not be catered to immediately. It's something that has to be done over a long period of time. But we need to start seeing them put measures in place to address that issue. Another issue that I feel that they need to look at is the fact that our system of agriculture is largely rain-fed. So it means that anything that is not determined by the weather or the season that we are in will not necessarily translate to higher production of goods, of farm produce. So we need to move from our traditional rain-fed agriculture to planting all year round. And another issue is that we recently saw news flows around the fact that some of these food producing regions are going to be very prone to flooding, given that we are currently in the rainy season. And that is definitely going to have an impact on the level of production, of food production that comes from these food producing areas. I'm talking about the northern states that are known to be producing some of the food items that we consume. I mean, Nigeria is too big a country not to be able to feed itself, and as well as export the rest to the outside country, export the rest outside the country. So we need to address some of these issues. Quick wins will be to know the pain points. The first is to look at how we can move from the rain-fed system of agriculture to an agricultural system that involves planting all year round, not necessarily waiting for a particular season where we'll have to plant this and then we'll harvest this in another season. So just improving on those areas, I feel will be a very quick win with regards to food. The import duties too that they have also, the policy around that they have also introduced is another thing that we are looking out for and hopeful that it will have a positive impact as well as in terms of food inflation and addressing the persistent rise in that.
So if this handshake goes the way we expect, when are we likely to start to see a decline in inflation? I know that's really very difficult to project. I know, Nabil, I'm not going to put you on the spot, but let's do a bit of projection on when we should start to expect a bit of inflation tapering down. That's a very important question. What do you make of that?
So really, I would say towards the end of this year, we should at least start to see that all these policies, the handshake is, firm between the monetary authorities and fiscal authorities in reining in inflation, because we cannot keep interest rates this high for as long as it will burden for the richest man, as you earlier mentioned, to come out and say that interest rates are high and borrowing costs is a problem for businesses. How much more the SMEs, the MSMEs that are also borrowing at high levels. So really, we need to we expect that these policies, there will be that synergy between the fiscal and monetary authorities, and we should at least start to see disinflation. Since we have at least tested month-on-month disinflation, we should test year-on-year disinflation as well towards the end of this year.
Well, let's now take it a bit away and also look at some interventions for government to raise revenue at this time. There are a lot of ways government is trying to ramp up all of this, but I'm asking experts like you, are there quick wins for government in regard to revenue? Because many will say that government needs revenue to run governance. Looking at the infrastructure challenge and all of this to have an impact on inflation, because if our roads are good, we can move farm produce from the rural areas to the urban areas. I hope you agree with me. So what sort of methodology do you think government can also institute at this time, particularly for revenue generation? Because oil theft seems to be killing the oil and gas sector, and it's something that the president says must be addressed. But what other options do we have?
I would say that for government revenues, the options are limited, in my view, because number one, aside the fact that they earn money from the crude oil production that Nigeria is known for, another source of revenue for them is tax. And at this point when Nigerians are already crying, not literally, but of high interest rates. The cost of living is so high. You do not want to burden businesses more by giving them higher taxes. You do not want to as well burden the entire populace by increasing taxes. And I believe that is what the tax committee really is working around, just to make sure that so what they are really doing is trying to incorporate other people, just expand the tax bracket, the tax net, so that we can add other people into that the net of paying taxes. That is one quick win, I feel. Another one would be, of course, another thing that I feel like the government will have to really consider is the fact that they do not want to go in the route of borrowing, because it will pressure their debt obligations and servicing going forward. So really, they have limited options, but they can only just start to focus on addressing the challenges around oil production and that region, because it will improve their revenue streams going forward. As you know, they just recently talked about taxing a windfall tax. So that one is, I feel, another quick win, because they wouldn't want to start increasing the VAT rates above 7.5% and also increasing company income tax, all in the name of trying to ensure that overall they increase revenues, since they have removed the income that they are getting from the import duties over a period of time. So all these issues, they really need to be very particular and meticulous about in terms of how they intend to raise money. But in the long run, they should be focusing on the crude oil area for now, since that's the major source of income for the country.
Nabila, before I let you go, you are an investment analyst, and considering the challenge that we face as a country, what sort of investments now are we going to be looking at? Yes, I'm sure our viewers are supposed to pay for this advice, but just give us what sort of conversation are you having with your clients at this time, and how are they seeing Nigeria, considering the reforms that many, the likes of IMF and World Bank, have said that's the way to go, despite the challenges, the fallout of these reforms?
So I would say for investment opportunities right now, if we're looking at inflation on a year-to-date basis, not a year-on-year basis, we still have the equity market class that is returning above inflation on a year-to-date basis. We have other Eurobond asset classes as well that are giving positive returns, given that there is exchange rate movement and the Eurobond asset class is currently doing well. So those two really are giving returns at least on a year-to-date basis above inflation when you look at inflation on a year-to-date basis. We can also consider alternatives as well. We have the infrastructural funds, the real estate trust funds. All those are alternative investments that really can give investors some form of positive returns in the long run, given that it's not as it is in terms of inflation when we look at it on a year-to-date basis.
I must thank you so much, Nabila Mohammed, is investment analyst with Chapel Hill, Denham. Thank you for making sense of this topic. It's really good to see you. Enjoy the rest of your day.
Thank you for having me.
Well, let's take a break. When we come back, we'll talk markets and see what is